Well, could volatility be creeping back into the market? The volatility index was at its lowest level since the pandemic to end 2023, but a week into the new year and the VIX is up nearly 5%. So how worried should investors be, and can we expect more volatility from here? Let's bring in Brad McMillan, Commonwealth Financial Network Chief Investment Officer. Thank you for joining us this morning. So as we're looking at this volatility to start the year, what are you making of it, seeing especially how strong some of these defensive sectors are to kick off the year?
I think there's a lot of fear out there. And when you look at what's going on, the market is trying to process several different things. First of all, there's growth. Are we going to have a recession? It doesn't look like it. You look at the jobs reports, they're coming in strong. We don't have recessions when people are working. Second of all is interest rates, but that depends on inflation. Is inflation going down to 2%? It doesn't look like it. So there was an expectation at the end of last year that the Fed was going to cut rates maybe 6, maybe 7 times. And the Fed said 3. And as we get the data, people are saying, well, maybe we're not going to get those cuts. And maybe we should be cautious and pull back. And I think that's exactly what we're seeing.
And so, Brad, how do some of these mismatches factor into this? You have the Fed, trying to essentially hedge their bets, but still saying, look, we're not ready to cut rates just yet. Markets charged ahead. Now we're seeing some of that more sobering effect. You have consumers not feeling good about spending, still spending rather robustly, although starting to pull back slightly. If you're an investor, how do you view these mismatches and where are the opportunities to be had?
Well, I think that first of all, what we're looking at is something we've seen several times during this cycle. We have seen the market say, oh, the Fed is really going to cut rates. And the Fed says, no, we won't. And the market talks itself into believing it. And then the Fed says no, and the market sells off. And we've seen that over and over again. And that's kind of what we're seeing right now. The market talked itself at the end of last year into saying we're going to get rate cuts. The Fed has said, probably not. And that's the reaction we're seeing. But at the same time, the opportunity here is simply we've seen interest rates move up and down. So there's opportunities in fixed income. You can get paid for that. There's opportunities when the market sells off. You can buy into fixed income with the expectation that indeed rates will go down again. So there's a lot of opportunities in fixed income. In terms of the market, I think we're seeing people betting on a defensive position. I think that's where you want to be. Both utilities and consumer staples are good places to be to hedge a slowing but growing economy.